sign.
You're live now.
So good afternoon, everyone, and welcome to this one-hour panel discussion on EU debt and national debt, friends or foes. My name is Gregory Kless. I'm a senior fellow at Bruegel, and I'll be moderating the discussion today. The idea of this panel today is to discuss about the debt issuance by the EU. And as you know, the first issuance of EU bonds for the NextGenerationEU program already took place on June 15 and has been quite successful with the issuance of bonds worth 20 billion euros. However, this is just the beginning, as the EU will potentially issue up to 800 billion euros in the next few years before the end of 2026. This will transform the EU into one of the major issuers of safe assets in the world in the coming years. And therefore, it is crucial to understand how this will impact the European economy, and in particular, how this will interact with national debts of European countries, as well as with European and in particular the ECB monetary policy. In order to discuss this very important issue, I'm delighted to welcome 4 high-level speakers that will be able to reflect on this topic from a different perspective. We will have actually 2 major bond sellers, if I can call them like that, and 2 buyers. So let me introduce them to you quickly. So in the order of appearance, we'll have Gert-Jan who is the Director General of DG Budget at the European Commission. Then we'll have Pablo de Ramón-Laca, who is the Director General of the Treasury and of Financial Policy at the Spanish Ministry of Economic Affairs. Then we'll have Rahmouni-Rousseau, who is Director General of Market Operation at the European Central Bank. And finally, last but not least, we'll have Yves Jacob, who is the Global Head of Public Sector Coverage at the French bank Société Générale. So let me thank you, all of you, very much on behalf of Bruegel for taking the time to participate in our event. And before I give the floor to our 4 panelists, let me quickly explain how we'll proceed in this event. We'll first start with some short introduction from our 4 speakers. I will give them between 7 and 10 minutes. Please do not go above that. And then this will be followed by a discussion and question from the online audience. So for our audience, you can ask questions during the event using some interactive online tool called Slido that you can find on the website sly.do, or directly on our website on the page of the event, actually, using the code NGU. So without much further ado, let me start with a question for Gert-Jan. Gert-Jan, thanks again for joining. Maybe you can start by telling us a bit more about that first issuance that was mentioning before, who participated to it, who bought actually those bonds, and about the Commission's plan for issuance for the rest of NGU. And also, if you have time, on what you think about the interaction that this will have with the issuance from EU countries. Thanks very much. The floor is yours.
Thank you. Thank you very much. Good afternoon to everyone online attending this event. So maybe if you put up a first slide, I can give you a summary of the first transaction, which took place on the 15th of June. Not sure, can you see that? I think this is coming now. So it's slide number 2, please. So if the colleagues could just move forward to slide 2, voila. So there you have the overview of the first transaction under our NextGenerationEU borrowing program taking place on the 15th of June, which attracted very significant interest. We had an order book of 142 billion euros. In the end, we issued 20 billion euros, so it was 7 times oversubscribed. We sought a single, we sold a single 10-year bond, and at this volume, this was the largest ever bond sold in the EU directed at institutional investors. So this was a very large issuance. Of course, this issuance was long awaited by the market explaining also its very large size. Now, if you look at the left hand side of this graph, you will see that amongst our buyers, we had a very nice mix of long-term investors and some short-term investors. Central banks and official institutions bought about a quarter of our issuances. We had fund managers buying nearly 40%. Pension funds were active. Bank treasuries at 25%, and banks for shorter term paper were at 2%. Hedge funds came in at slightly below 1%. That gives you a breakdown of the investor types behind the purchasing. If you now look at the geographies on the right-hand side, bottom right-hand side of the panel, you can see it was still heavily European focused. The UK comes out as the biggest geography in this regard at nearly 25%. But of course, that reflects the City of London and the international investment institutions that are still located there. And then you see a very significant presence of the Benelux, France, the Nordics, but also a healthy share of Asian investors at 10%. What you see here in terms of distribution is not radically different from our earlier shore issuances. We put this in the market using our brand new primary dealer network, which is one of the features of our new diversified funding strategy, which really, I think, is at the heart of the borrowing campaign that we will be launching to fund NGEU, the 800 billion you refer to, where we have a brand new strategy based on what large sovereigns do to effectively raise the necessary funds. Now, before we get there, let me maybe say that we are in the market today for our second issuance, again using 7 banks in a syndicated transaction. This time round, we will be selling a dual tranche with maturities of 5 and 30 years. I will not tell you about the price and the distribution of investors until the transaction is fully allocated, which will be in the course of this afternoon. However, what I can already say is that the pricing, like last time round, is really rather good. So the market is interested in these products, which are safe AAAs, allowing a pickup to the Bund in these markets. But coming back now, if I can have slide number 4 on your pack, to talk a little bit about the way we do this. I already mentioned that we are moving away from our previous approach where we relied exclusively on a very small group of banks specialized in AAA rated issuances to fund essentially back-to-back loans. Now we're in a different world. We're essentially funding a large number of uses of the funds. Some of these are loans that will be granted in the context of the recovery and resilience facility. Others are grants, non-repayables that go to the RRF, but also to another 6 programs in the budget, with very different characteristics in terms of size and frequency, therefore a very different game altogether, which means that we're basically borrowing for our funding needs across the piece using the most efficient tools, including auctioning. And in the process, we are building a complementary curve of very liquid AAA rated assets. And that is something the market is telling us is really needed. Now, if I may also say that this is already seen as a reference point for some of the participants. Of course, our volumes are still relatively low, but we would expect over time this to be a complementary reference point. And what we hear from investors further afield, so outside of Europe, is that actually this product is very, very attractive and is a reason for investors to pay more attention to European capital markets, therefore adding genuine interest, not just to our products, but to products available in the EU capital markets more widely. So that is a clear value added beyond the pure funding dimension that obviously this program has as a crucial plank of the NextGenerationEU recovery instrument that we agreed last year. But the impact on the capital markets, I think, should not be overlooked. This could be potentially rather significant. We're at the very early start. This is the second issuance going through today, so we cannot speculate too much on it. But so far, and also in the light of SURE, the indications have been very positive indeed. So we believe that by doing this well, by building this EU Treasury funding these needs, admittedly for an exceptional purpose, crisis-related instrument, but by demonstrating that we can do this well, raise these funds at very low cost without running undue risks and delivering the funding, we can actually add a significant piece of armor to the toolkit the EU has to deal with crises going forward. Now, let me conclude with one broad reflection on the interaction between EU debt and national debt. So the first point to make is that when we were designing the strategy, the possibility for the EU to borrow through the EU budget and to route all of this through the EU budget had meant multiple advantages in terms of controls, in terms of accountability, checks and balances, all of which would not be available in an intergovernmental setting. But there was also an additional factor, which is that the debt owed by the EU budget does not translate into national debt. And this is because Eurostat doesn't qualify it as such, given all the imponderables regarding the distribution key in the future when the debt needs to be repaid across member states, but also the funding side of the budget, which can still evolve and might contain new own resources. So obviously this debt will have to be repaid. It will involve about 15 billion euros on average between 2027 and 2058. But it's EU debt and not national debt. So in terms of debt burdens, GDP to debt to GDP ratios in member states, this is a not unimportant point. Final point. I've mentioned the advantages this approach has for EU financial markets more generally. Obviously, however, we are a very big borrower. We're one of the largest borrowers in the market for the next 2 to 3 years, on a par just slightly below Spain and Italy. We're a AAA rated product. There are smaller AAA rated issuers as well. And we will need to see how all of this plays out in terms of how this affects the demand for and the price of national debt. Will this crowding in, crowding out trade-off lead to overall benefits even for the smaller AAA rated sovereigns or not? So far, we have seen no evidence. I think that it goes at their expense. There's no evidence in the SURE issuances. There's no evidence in NGU1. But obviously, it's very, very early days, and this is something we will be looking at. I would conclude, however, that the success of this approach is going to be absolutely critical as to the question whether this method, which is a one-off derogation from the normal rules of funding of the EU system, can be replicated going forward. So the financial side is critical. Obviously, even more critical is the ability to actually deliver the necessary investments and reforms and to generate the additional growth and avoid increasing divergences across member states. On the expenditure side, we're not talking about that today, but I think these are the two critical factors to determine whether we've actually got it right this time around. We got off to a very, very fast start in the wake of this crisis, much faster than in 2008, 2010. I think we've designed a really innovative tool. Theoretically, it should give us significant advantages, but there are downsides and risks, including significant execution risks. So there's a lot to play for going forward. However, for now, we are very confident and looking at this playing out with a lot of energy and enthusiasm. Thank you very much.
Thanks very much. Actually, it's interesting your conclusion because last week we had an event on how to spend it and on the expenditure side. So I invite our audience to watch that event, which is available on our website if they are interested in that topic. I'll now give the floor to Pablo, who will actually, it will be perfect because as director of the Spanish Treasury, I think you can tell us a bit more on the impact of this of the issuance of EU debt on such a scale on national debt and in particular on Spanish debt. And in particular, you can tell us if you fear that EU bonds could crowd out national debt, in particular for the countries that are that have lower ratings than the EU, or if on the contrary, you expect the EU debt to crowd this in because it improves the architecture of the Eurozone and hence the role of the Euro on the global scale. So please, Pablo, the floor is yours to discuss that.
So thank you very much, Grégory, and thank Bruegel for this wonderful panel that you assembled. And it is truly an honor to be here. And first of all, let me just congratulate Gert-Jan and his entire team for having done something absolutely extraordinary in a very, very short amount of time. You've done everything right up to the moment. It's an easy thing to get wrong. And so I applaud you and your team for how well you've done. So the NGEU and national debts are supposed to coexist for a number of years, and they could influence each other both on the supply side and on the demand side. Right, on the supply side, it's not like it's the US coming to Europe to issue in euros. The NGEU is funding items on national government budgets. So the counterfactual would be national issuance. So in that sense, they are funding investments, not current expenditure. And therefore, there is an attempt to influence GDP. And where we are right now, more than 100% debt to GDP, at least in the Spanish case, an increase in growth is the single most effective way to reduce debt to GDP. More than any fiscal consolidation, it is by no means exclusive, it is by no means sufficient, but it's definitely necessary. So insofar as NextGenerationEU is a supply side long-term program designed to increase structural growth, this should reduce all of our debts to GDP insofar as it doesn't count, the numerator doesn't count, and the denominator is supposed to increase this way. So the net effect is likely a reduction in our national debts through more growth, if implemented correctly at all levels. And I say this with full knowledge. Secondly, is there an effect on the demand side, crowding in, crowding out? There is a case to be made for this crowding in, and that crowding out could just be temporary frictions, right, of these transitions. So the crowding in could come through two ways. First of all, as you said, it could be perceived that the European architecture has improved and that solidarity has improved and that this improves all of our credits. So nothing unites more than joining liabilities, right, at the household level, at the firm level. So this could encourage investors that all credits are bound to improve. But there's also another portfolio effect. The Eurozone is a strange animal in that if you want to invest in fixed income in the Eurozone, there is no one single asset right now that you can buy to have a risk-free, leveraged, liquid portfolio on top of which to build your risk. So right now, what many investors are doing is they're buying, on the upper end of the credit scale, what's available. So they try to buy bunds, and there's, those are relatively scarce after the monetary policy, and because they haven't been issuing as much as others, right? And then moving down into French bonds, etc., right? And then building their risk on top of that. But the size of their total portfolio is limited by the availability of these safe assets. So the crowding in effect could come through more availability of this liquid, safe, representative European asset, on top of which they could put in their bunds, French OAT, Spanish SPGBs, Italian BTPs. So the portfolios can be bigger. And this is why we say that the international role of the euro could become stronger this way, because European portfolios could be bigger. An Asian asset manager could buy more SPGBs the more NGEU is out there. So it may very well be the case that large global investors will be crowded in in this respect into larger portfolios. So this is an encouraging theoretical aspect, and whether or not it happens is an empirical question. Still early days. There's been few transactions as yet, but the evidence is beginning to point in that direction. NGEU, let's remember, issued 20 billion with 142 billion demands 1 week after Italy issued 10 yards with 65 billion demand, and 1 week before Spain issued 8 billion with 74 billion demand. And the price was remarkably stable throughout. The market seems to have absorbed, 38 billion in the same maturity in just under 2 weeks, with a surprising amount of stability. So this is encouraging. We still have to see it, but having been the last out in that line, we were surprised at how well the market absorbed so much supply. So will it play a benchmark in the economy? Well, I have to say, if it's done correctly, and I have to put my professional hat on, and I would have to say that the EU Commission should behave more and more like a sovereign DMO and less like an agency. What do I mean by this? That they have to take care, as they are right now, of secondary market liquidity, which can't be taken for granted. Right now, there isn't a lot of supply in there, and you have to make sure that the primary dealership pool is also a pool of market makers that are incentivized, committed to be buyers to sellers and sellers to buyers, and to make sure that the indexes, that the global investors know that there will always be buyers to large volumes for sellers, and that secondary market liquidity is guaranteed that way. SSAs don't always guarantee it, and sovereign DMOs, we do make an effort to make sure that there's secondary market liquidity. You've taken all the right steps so far, but we have to make sure that the primary dealers are incentivized to be market makers as well. Can this become the safe asset? Well, as Gert-Jan has suggested, it is a political question. It is almost a philosophical question, because it will be perceived as a safe asset by markets if they perceive that societies and political establishments see it as a permanent feature. This is designed, and it's very clear, it's designed to be a temporary mechanism. However, if it's seen to work, it could also be interpreted today as a pilot program. And that's, who's to say that if it's seen that spending and investment is efficient at the supranational EU level, that it won't continue. And if it is seen as a permanent feature, then we're talking about the international role for the euro, a US Treasury competitor, a true US Treasury competitor in the market, on top of which portfolios can be constructed, and that we can all be crowded in to these virtuous circles, cycles that we are searching for. So it's a great opportunity. We have to do this right at all levels, but let me congratulate the Commission for having done everything right so far.
Thanks very much for this comprehensive answer. I'll now give the floor to Imen to know a bit what's the view of the ECB on this historic event, and what role the EU debt will play in the implementation of monetary policy in the Eurozone, and if it will play a major role in the ECB's asset purchase in the near future, and also in its collateral framework.
Thank you, Gregory, for the invitation. It's a pleasure to be in this panel. Let me start by again congratulating Gert-Jan and his team, with which we collaborate very closely for, I think, an impressive work that led to this very successful NGEU issuance last month and this month. Yeah, I mean, I'll start with your first question, which is what's the impact and the ECB view on the impact impact of NGEU. Then I'll go to the question that briefly Pablo, talked about, which is the safe asset and the status as a safe asset, and then I'll finish by the implementation questions and what's the role there. So perhaps one way to look at the impact of NGEU is to remember horizons, yeah? So in 2020, in spring 2020, we had in a short amount of time, we had first the launch of our PEP program, yeah, the Pandemic Emergency Purchase Program on the 18th of March, and then followed the NGEU for the Franco-German proposal, and then NGEU in May, and then finalized afterwards. And I think that the two, so the announcement of the purchase program and the announcement of NGEU reinforced each other, yeah, and I'd like to explain why. So I think that clearly, both of them were aimed to stabilize markets, and both of them were very efficient in doing this. Yeah, and another feature that they share is that the mere announcement, yeah, was sufficient to actually stabilize markets, even, and I think it's even clearer in the case of NGEU, because the time span between the announcement and the actual implementation, like the first issuance that we had, is actually more than 1 year, yeah? So this is, in my view, a very strong announcement effect. It's a kind of, whatever it takes kind of effect, yeah. So that's important. The other thing on horizons is that that's the short-term impact of 2020, where NGEU helps in stabilizing market and mitigating fragmentation. But then if we go to the current period, so 2021 to 2023, I think NGEU will help to, close the output gap and the inflation gap faster, yeah, and that's important. And for us, also in the medium term, NGEU has the potential to accelerate potential growth, yeah, with its, in particular, the green, the digital part of it that is really boosting potential growth. And this, of course, has a link with monetary policy, because it reverses the decline in the real equilibrium interest rate, and that in turn, decrease the frequency at which we can expect to be at the effective lower bound of monetary policy. So that's actually quite, important. So it was already said, it's also very important in terms of scale, yeah, 7% of euro area GDP, and this is completely unprecedented, yeah. So now turning perhaps to the question of the safe asset, I think I agree with most of what Pablo said. Just wanted to add a little bit more on that. I think indeed that only time will tell if EU bonds become a real benchmark, yeah, for European financial markets. But I would say that the first steps are already quite going in the right direction, yeah? I mean, the DMO style approach, I think the Commission has already started with this, and I would completely agree with the focus on secondary market liquidity. What I would add to that is that it's probably also important to pay attention to the repo market, yeah? So that these NGEU securities can be used in the repo market, and that will also support secondary market liquidity. And perhaps, more longer term discussions about, or thinking about the futures contract could be also relevant for the market. And I mean, the time limited, nature of the instrument could be at some point a hurdle for acquiring benchmark status. But I think it all boils down to what was mentioned about, is it a kind of template for a crisis instrument that can be used further down in the future? So concluding and coming back to your point, which was what's the impact on ECB monetary policy implementation? There are actually three dimensions. One is that the NGEU debt is eligible for the purchase programs. It's eligible for our public sector purchase program, the PSPP, which is open-ended, and it's also eligible for purchase in the PEP, so the Pandemic Emergency Purchase Programs. And it's eligible for purchase in the secondary market, yeah, but very important nuance, yeah. And in terms of scale, it's actually 10% of the public sector purchases that are directed towards EU supra bonds, yeah, and part of it is then NGEU. So that's for the, the purchase programs. Then you mentioned collateral, which is also very important because it helps, banks refinancing themselves and having the capacity to do so. And there also NGEU bonds are eligible as collateral. Actually, the first issue became eligible on the 28th of June, yeah, in the collateral pools. And the third dimension, which is perhaps less well known, is that, but Gert-Jan knows very well, is that the ECB is also providing account and payment services for NGEU. So that's more of a back office function, yeah. But we basically process in DG Market Operations the payments, yeah, from the market issuance and then down to the member states. And there's been a lot of work and very good cooperation with the Commission on that. So that's basically the three dimensions. I'm happy to take, any question on these. Thank you.
Thanks very much. I will now give the floor to Yves in order to have the view also of a private buyer for the bank, for Société Générale, but also for the clients of Société Générale. And I would love to hear your views also on this interaction between EU debt and national debt. And also if you think that this NGEU bonds will be able to play a benchmark role in Europe financial markets.
Thank you, Gregory. And I feel as the only representative of the private sector, I feel a heavy responsibility of speaking, on behalf of diversity of market participants. Of course, so I'll just try and give sort of some highlights of what I think are the current thoughts in the market. I mean, obviously, I have to say that to start by saying that we have enormous respect, but what's been achieved by the Commission, by the ECB, by all the DMOs in Europe, it's been incredibly well managed. And I think there's wide recognition among market participants that we're in a much better place now than we were 1 year ago. And I think it's amazing to think about, it is actually a luxury to be debating today about EU debt versus national debt when 1 year ago we didn't have vaccines, we didn't have, we barely had SURE established, but no SURE bonds, and let alone NGEU didn't exist. So it's incredible the amount of time the amount of progress and ground that's been covered over the time. And again, we're talking about it's a nice problem to have that we're debating this today. The thing I want to say as a start as well is as a market participant, as one of the largest banks in the Eurozones, we obviously have many hats. It was presented in Gert-Jan's presentation. I mean, the banks generally buy, about a quarter of all those bonds, SSA bonds. I won't be talking with this hat on. I think it's managed independently by the Treasury of the bank and on arm's length basis. I think it's more interesting if I speak on behalf of our other role, the role of what the other commercial banks are doing. And what they do is effectively they put the oil in the engines. They are the sort of intermediary, acting as agents on behalf of both issuers and investors. And I have to, highlight, as an important disclaimer that we are ourselves a primary dealer to the Commission. We are a primary dealer to the Kingdom of Spain, and we have, extensive relationships and commercial relationships with these two issues as well as with the ECB. With that being said, I want to make one first comment, which is that what has happened is meaningful, and I won't repeat. It was very well said by Pablo and Imen about why this is significant. But as a market participant, I want to acknowledge the fact that it is indeed meaningful. That we've had new issues coming to market before. I mean, it's not unprecedented. We had the FSF before. In France, we had CADES, and there was FMS in Germany, but never on the same scale. And I'll come back to the question of scale because it's important. And also, again, in terms of timing, how quickly all this has happened. And I'll also want to highlight something which I think is important. Is I was just reading a recent publication from our own research, investor research, and we're actually singling out the EU as the largest issue, expected largest issue in terms of volume for the second half, which comes as a surprise because when you look at the numbers, it's not so big. But what you have to keep in mind is looking at the net issuance, and their statement was about net issuance because of course it's a new issue. There's very little redemptions in the meantime. So in terms of adding net supply to the market, what is happening now with NGEU and what happened with SURE over the last 12 months is very significant. Now, in terms of size, and I'm sure we'll be debating this more, I think it's a complex question to answer because some will say it's big, others will say it's small. To me, there's three parameters that need to be kept in mind in terms of assessing how meaningful this is for the market. The first thing is that this has happened in a context of a surge in SSA issuance in the euro market. So we're coming from a level of about 1.2 trillion of annual issuance pre-COVID to 1.7 trillion, and this is massive. I mean, 1.2 was a very stable number. We don't know yet how much is going to, be issued this year. Run rate is about 5% down, but we're broadly expecting a similar number. So all this is happening in a context where obviously anyone knows the underlying reasons. Is there's more public expenditure to be funded. So the overall stock and activity of SSA issuance is increasing. The second thing, and it was said by the other panelists, is as far as the relationship between the Commission and national debt, this somehow is a zero-sum game. What we're talking about is a change of mix between what is being issued at national level, what is being issued at federal level. But at the end of the day, it's one same pot, and what is being funded here would have been raised otherwise there. And the last barometer, the third and last barometer I want to highlight, and it's been mentioned as well, is that has happened, of course, in also a very special context which is QE, the expansion of APP, the addition of PPP, which is obviously sort of changing the cards and changing the equation in terms of how much is bought by the ECB. And hopefully we'll have more time to debate about this. But all this to say that all this, I mean, this is happening with many parameters, many boxes that are changing at the same time. And then the last comment I want to make, and more as a sort of opening question for the rest of the debate, is what is on investors' mind at the moment is clearly what's happening next, what's coming next. I think it's been reconfirmed very clearly that this is temporary, this is derogatory, this is one-off. Obviously, investors, they want visibility. They want a clear outlook of what's happening next. This is, very exciting in terms of the creation of a safe asset, of a deep, liquid, single, risk-free asset class. But investors won't take that bet until they know there's something permanent. So the real question, I think, on investors' mind is, we're here. This is a journey. We're at the start of the journey. This is, just the beginning, and we want to know now what's going to happen next.
It's great to finish with that question. This is exactly what we want to all know, actually. And actually, there are some people from the audience on Slido who are asking this question on what will happen next. Will it be permanent? Can it be a benchmark if it's not permanent? So I think we can start with that, actually. I don't know who wants to take the floor to answer that question. Maybe Gert-Jan or Pablo, you want to answer that. Can EU bonds play a benchmark role really if it's not a permanent feature?
Well, maybe thank you, Gregory. I'll say two or three things. I think we are at a stage where legally this was constructed as a temporary one-off exceptional crisis response mechanism, and that's what it is in law. However, because of the scale and the nature of the beast involving repayments over a very long period of time, it is, even in its temporariness, a feature that will be around for decades. Now, secondly, coming back to what I said in my opening remarks, ultimately, what the markets need to look at is whether this works. Whether it works on the expenditure side, the growth enhancing features Pablo was discussing, and on the financing side, the stuff I'm doing. If the two of them work, you have a temporary mechanism that will have proven its worth. Now, everyone who's followed the EU's economic policy response in crises knows that it is very, very difficult to come up with something that is effective and that can be rolled out quickly in a serious crisis. I cannot predict the future, but I think anyone who has some knowledge of the political economy of decision-making in the EU will see that if these two things work, some comfort can be drawn from it going forward. Let me underline here also the fact that the degree of solidarity displayed and the speed of decision-making really is unprecedented. I remember when we first presented these ideas to our political authorities in early March. This looked very, very distant from reality. But the decision-making has been incredibly fast, and I would say the institutional solidarity, and I want to take this opportunity to thank Pablo in his capacity as chair of the SDM and the colleagues from the EMER from the ECB. There's also been a pulling together of all of the international institutions to address these issues. And I think anyone out there operating in an environment of uncertainty, which is what market participants do, if you want to wait for a final system that is anchored in a treaty, you can wait a long time, I think. You want to wait for something that is actually a proven template, then it's a different story. And that's really, I think, what the next 2-3 years are going to be about. Thank you.
Thanks. Do you want to react to that, Pablo? I see that you open your mic.
Yeah, I could add that the European way has always been gradual. It is tinkering, improvements in making mechanisms and situations better or more bearable for everyone. And then in a final cost-benefit analysis, it is seen to work more than how costly it is. So in the meantime, it is temporary, yes, but in the meantime, we can make it as liquid as possible. We can encourage, as Imen said, a private sector-led futures contract, a liquid one, and there are several out there, and there are things to be done at the technical level to provide a lot of bonds out there for one to be the cheapest to deliver for the 10-year future. That will provide liquidity to the market, that will facilitate repo transactions. So there are things that can be done at a purely technical level, basic professional things by a DMO that can help this decision 7 years down the line. And let our elders and betters decide then, based on a product that actually works on the liabilities side. And it is up to all of us at a political level to show that it works on the asset side, right? But if, as Gert-Jan said, if you're an investor and you're waiting for this to be enshrined in law, it may well be too late, and there are advantages that others are taking based on how Europe's grown and developed since its very inception.
Actually, you mentioned technical issues, and I see that in Slido there are a lot of technical questions. So let me take a few questions and bundle them together, the technical ones. For instance, someone anonymous, actually everybody is anonymous, it seems, on Slido, is asking a question about funding in other currency. Will it be only in euros, or will you also issue bonds in other currencies of the EU? There is a question that is quite popular too. I just read the question. At which point will the EU shift its focus towards tight pricing rather than large order books? And there is another question, it's kind of similar. The EU just issued 20 billion euros in bonds. Will you continue with this type of size, or will you issue smaller amounts and tap the bond like sovereign style? I don't know if someone wants to take those technical questions on the currency denomination, on the size of the issuance. Gert-Jan, maybe you want you have something to say about that, or?
Yeah, maybe to say that we will only ever issue in euro. That has to be very clear. The euro is the currency of the EU. Secondly, in terms of our funding plans, anyone who wants to know should look at our funding plan until the end of the year, which says that we'll be raising about 80 billion euros in long-term bonds and some tens of billions of euros in bills, EU bills from September onwards. So from that, I think you can clearly see that 20 billion is really, I think that is on the very high side. We have a disbursement schedule that is heavily front-loaded, because there's a lot of pre-financing under the Recovery and Resilience Facility falling due in the next few months. So I'm not sure we'll always go to 20 billion, on the contrary. And in terms of taps, yes, we will do taps. I think once we have issued a series of key tenors, then we will tap them. And we will also, obviously, as I have underlined, and maybe I should have said more about this, we will have our auction program. All of our bills will be auctioned for obvious reasons, but we'll also start auctioning our bonds as well from September onwards. So we're really, I mean, just to pick up on a point that's very important in the debate, we are seeing ourselves as a sovereign-style DMO. That's what we are. So there's also market-making obligations on our primary dealers. They cannot be once we're a little bit further down the line, they will have to be active in the secondary market to continue to play their role in our pool. So that all of that is really crucial. Thank you. Sorry.
I wanted to ask a question maybe to Yves about the green issuance, because as you know, 1/3 of the bonds will be issued as green bonds. And I wanted to know what the market think of that. There have been some discussion about this, about people saying that this could be bad actually for liquidity because we would have a different segmentation of the bond. Do you think that's true, or this is not at all a problem, or there is such a demand for green bonds that this is not an issue for the EU bonds?
It's the latter part, without a doubt. I mean, there's an amazing acceleration of sensitivity and willingness to promote sustainability among all walks of investors, all types of investors. I think what has made the SURE bonds and the NGU bonds particularly popular is the fact that they because, as I was saying early on, they finance new projects, so they're real, they're concrete, and in terms of use of proceeds, the investors know what they are financing. And with SURE, they were financing projects with social benefits, and for NGU, they will be financing projects with up to 1/3 with green benefits. And I think that's absolutely fundamental for investors. We're seeing a shift that is, again, accelerating every day. It's across all investors, all geographies. Europe has always been at the forefront of this trend, but now we're seeing, same types of inquiries, investigations, questions from investors from Asia, from the US. And to us, there's no limit. I mean, it's a market that is extremely well bid at the moment, and there will never be enough supply of those sustainable bonds to meet that demand.
Just wanted to react perhaps on that as well. Yeah, I think it's clear that Europe has become the largest place of issuance, yeah, for green bonds. It's the European Commission, but it's also a number of European sovereigns that have joined the bandwagon of green bonds this year and the years before. Yeah. And that's very important for portfolios, but also for this, international role of the euro, yeah, because I think it gives it a green flavor, yeah. It's like if you are an international investor, a central bank, FX reserve manager, and you want to increase your percentage of green bonds, then clearly this is one of the instruments of choice together with the national bonds, yeah, and there's no competition there because, as Yves said, there's actually not enough green bonds around, yeah, to satisfy the demand. So it's very, I think it's very complementary. Not to mention, as I mentioned before, I mean the long-term perspective, which is this thing about good investments, investing in green and investing in digital and technology for boosting potential growth.
And actually, I wanted to ask you the question, as far as the ECB is concerned, given that I know this is something that is discussed in the current strategy review about greening monetary policy, could it help actually green the ECB's monetary policy? I don't want you to reveal anything confidential, but.
No, I mean, the thing is, I want to comment specifically just to say that, you know, when the market becomes greener, we also purchase more green bonds, yeah, and then the rest, which are the details and how the implementation toolkit is adjusted in response to climate change. I think indeed you will see it when we publish the results of the strategy review. That's one of the streams that is kind of really significant in the.
Thanks very much. Maybe given that there is only one market participant, I'll give him the floor more than once. What else do you expect from the EU? What could be the next step for you, and what would you like to see the EU doing as a market participant, Yves?
Well, I guess we all share, a common agenda, which is to make the euro market more attractive, more popular, more, an attractive venue for international investors. I think was shown quite clearly in Gert-Jan's, distribution pies for as far as the issuance of bonds. There's about 40% of this market which is supported by foreign actors. The question of safe assets is fundamental. I think it's been already widely debated, so I won't, add to that. I'll probably make a comment on anything that relates to efficiency and modernization. It is a market, arguably, which is already pretty efficient. We need to make it even more efficient. I think now, if I look back at even the earlier crisis, the global financial crisis, I think we've seen from this crisis that capital markets, we need to rely more on capital markets rather than bank funding. And for this, we need to make capital markets more efficient. There are initiatives at play in terms of making those markets more efficient. I'll just raise one because we happen to have been involved in that initiative. There was a digital bond that was issued by the EIB a couple of weeks back for 100 million euro. It is a symbol, it is small, it is a baby step, but a very important symbolic baby step. What I'd like to remind people may find it a bit far-fetched, but back in 2007, the EIB issued the first green bond. And I think many of us at the time thought this was very, very exotic. And here we are 15 years later where, it's become mainstream. So perhaps we should pay attention to those, sort of weak signals in terms of, devoting more attention, more investments, combining the strengths of the public sector and the private sector to make sure that the euro market can be more competitive also in terms of those technologies.
Thanks very much. We only have like a few minutes left, so I think I'll give back the floor to the speakers to see if they have concluding remarks. Maybe I could give the floor back to those who have spoken last. So, yeah, if you just spoke, but then Imen, then Pablo, and then Gert-Jan for the final words. If you have anything to add in 2 minutes.
Sorry, so it's me.
I don't know if you have anything to add.
I mean, that's fine. I know we're short of time, so I'll leave the floor to Imen then.
Yeah, perfect. Thanks.
Thanks, Yves. So no, I just wanted to pick up on this point of capital markets, yeah, because I think it's also, the capital markets union that was started by the Commission, I think is very important for everything. It's important for growth. It's important for transmission of monetary policy in our case, to make it more efficient. So I also very much hope that there will be more initiatives around that, yeah. And I think that fits well with the idea of the architecture that Pablo also mentioned, which is, more than anything in Europe, we need a very solid, resilient architecture, not only in terms of crisis, but also, more permanent.
Thanks very much. Pablo, any final word?
Well, no, it's ball's on our court now. It's been well set up, and now it is up to all of us to deliver. Why do I say this? Because at the beginning of next year, those Asian accounts are going to set up their investment benchmarks. They haven't yet, and so we're going to see just how complementary NGEU bonds and national bonds will be. So we need to, far from delivering once and then sleeping on one's laurels, we have to continue to deliver benchmark by benchmark. And to show that this is an instrument that works. The work doesn't finish just because we have shown that NGEU can work as an issuer. It needs to be shown to work on the asset side as well. So we're all aware that that the ball's clearly on our court now.
Thanks. Gert-Jan, I give you the final words.
No, Pablo has basically said it all. It's delivery time. It's a huge responsibility for all of us, but I think we know what we need to do. Our track record is not too bad over the past year, and we're very motivated, given the stakes out there, to continue delivering in partnership with the ECB, in partnership with the member states, partnership with the ESM and the EIB and other players. So I would say watch this space, and maybe we should be having this conversation a year from now and see what the verdict is then. Thank you.
Perfect. Then we'll meet again in 1 year. I will invite you all, and we'll redo this conversation. Of course, we could continue this fascinating discussion for hours, but unfortunately, the session is coming to an end. The hour is over, so I just want to thank you very much to the four of you for participating to our event today, and I hope to see you soon, maybe in Brussels at some point when we start our physical events in the office at Bruegel. So thank you very much.